Welcome to Virtual Coffee with Dawn Rickabaugh, the Note Queen, where we talk about owner financing and notes. Financial solutions, one mom and pop to another.
The most valuable thing that you can do to create passive income is to develop capital partners that will go in with you. The lower your cost of capital, the higher your profits, and without even having to be the rainmaker. You don't have to do anything. You don't have to create a new business of being a wholesaler or a note broker or anything like that. You can take notes that are already out there. You develop the cheaper capital and say, hey, Mr. Smith, I know you've got 500,000, basically less than 1% in your bank account, but trying to get those people to be comfortable with the asset class is the biggest struggle. If you go to the, investors like me or your real estate clubs, everybody's yield hungry, right? You're gonna need to pay 8% and up to people who are like in the business, of notes and real estate. So the best thing you can do, the most valuable thing you can do is, if it's not easy for you to create leads, then develop capital partners that are happy with 3, 4, 5, 6%. And then you can make a lot of money and solve a lot of problems. That's great. That deal that I did back in February, it was, I bought it for cash, but I ended up paying off my hard money lender because I had to have the money. We closed in 2 days, which I've never done that before. But to get my family in there that I wanted to carry for, I had to get rid of the 10% hard money loan. And I had to replace it with this lady in town who she thinks that, and she's totally happy with, she thinks 4 and 5% is a great return. And she only cares about the story of why it matters. So she lent this family, they had, I gave it to him about 50,000 below market value, and I still made good money. And this lady loaned them the money at, they had 10% down. Did they? Or was it more? 250? No, they had 20% down. They had 20% down, and this lady loaned them money long-term at 5%. So I want more of that money in my town. If I had more people that have a lot of capital they're comfortable with the asset class, but they don't need the sophisticated investor returns of 8 and above. Wow, can I put a lot of deals together for people? And so she's going, yeah, well, I usually get 2 to 4%, with this and that and that. And now she's down a third because of the stock market. But anyway, blah, blah, blah. So hopefully somewhere in there, you found value in coming on the call, I hope. Is there any last questions before I move on a little bit here, Jorge?
No. You pretty much answered all my questions in all different scenarios I can come up with.
You know what? I'm excited for you.
Well, I hope this one works.
You got a deal here.
I hope so.
That's fantastic.
He's anxious today on me giving him the final numbers because we've been going back and forth for about a month. Yeah,
so make it happen, Jorge. What are you waiting for? Get off this call right now. I want you to hang up and go make a deal. Well, thank you so much. That was a really good case study. That was a lot of fun. I
appreciate you. I appreciate all your time.
All right. Take care.
Take care.
You've been listening to Virtual Coffee with Dawn Rickabaugh. For more, please visit notequeen.com.
Basically, let's get down to the basics. What is a note? It's a promise to pay an IOU. I owe you this money and I'm going to pay it back over these terms. Now in real estate, and ideally if you're making a loan, you have a security instrument. That means if you don't keep your promise, you're going to lose the asset. It's secured by an asset that can be retrieved and sold to get the lender out of their financial